Hello, everybody. This is Justin from Breakout Capital Ventures. Today, joining me is Alan Green. We're going to talk about a few shares this morning. How you doing, Alan?
I'm very good, thanks, Justin. Good to see you again. And
Yeah,
let's get this budget over with and get this market flying towards Christmas, eh?
absolutely. I think once the budget's out of the way, I think we're going to see a Santa rally as well. So, I think the bad news is kind of priced in, and once everything's been worked out, I think that we're going to see money pile it back into the market. So, it should be hopefully, as you say, a good run up till Christmas. So, the first one we're going to do is URU, and this is one we covered off not so long ago, and we were absolutely spot on. I said that we thought we'd head up to this red box zone up here at 12.4 to 15.1, and it absolutely shot up to that level. And then we've had a bit of a pullback. And for me, I think this looks, as long as we stay above this sort of 6.75 level, I think we look really good till another run higher. And, it's quite good because I think that, if we could just break and hold above 11p, so a close above 11p, I think that's going to bring us up to my next red box zone here, which is 18.7 up to 21.8 pence. So an awful lot of return in that. But if I just flip to my weekly chart, and I'm sure, on my weekly chart, I've got a different target. So there's a possibility, I think, play it safe, run up to the daily, but, see how things are going at that time. And we could have a bigger run up to this 21.8 to 27.6 pence. So potentially an awful lot of reward there in URU. I think there's been a few developments since we last spoke. So I'll let you chip in there, Alan.
Well, absolutely, Justin. And I mean, listening to those price targets. So we currently have just over 7p, a market capitalization of 6.9 million. And this is for a company that owns the Zeb nickel project in South Africa's Limpopo province. Now, the Limpopo province contains a lot of major mining projects and also active mines, huge mines. The Mogalakwena mine and Ivanhoe Mining's Platreef project. Now, the Zeb nickel project is situated between the two. The geology is contiguous between those two huge assets in the ground. And in 2012, there was a reported inferred and indicated resource non-JORC of over 1.5 billion tons at 0.25% nickel. Estimated NPV, net present value, at that time of 317. Now, the work that's been undertaken this year so far, Spectrum Plus aerial survey, has identified high value conductors in the ground. The company is currently planning a major drilling campaign to test those conductors and to confirm the presence of those conductors. And I think once we get that data back, that'll be coming back over the next few months. I think we're going to see UAE absolutely fly. But a lot of development since we last spoke. The shares, of course, in the company are very tightly held. The CEO himself, John Zorbas, is a major shareholder. There are a lot of institutional investors that have come into the project as it's de-risked. And of course, a month or so ago, the company raised 1.1 million at 7p. It was a hugely oversubscribed fundraising. So that, in a sense, really provides a floor at 7p. And I think we've seen the shares kind of go down to that level and then bounce back up again. But the major fundamentals of late, of course, the 30-year mining right has just been granted, and that was announced with the fundraise. So expecting a lot of stuff from URU, real fireworks. And remember, even at this level, it's just a market cap of just 6.9 million. That's nothing at all. This is worth many, many times that, in my opinion, but please do your own research.
Yeah, actually, it's done really well with the recent sell-off we've had over the last sort of 4 weeks or so. Pretty much everything that was in profit had sort of been sold off, but URU's actually held really well. So, it wasn't that long ago. It's at around the 3 pence level, and it's so, there was a lot of profit that could have been taken off the table, but investors are clearly choosing to leave the money in there. And as you say, the market cap is tiny compared to the NPV, isn't it? So, it's a realistic target, as I say. Break that 11 pence, and we're game on for a stellar rise on that one. So, definitely worth doing some research.
But even I was going to say, even at those higher levels, Justin, you still have a very modest capitalization. So I think this has got potential to go so much higher than that. But, certainly from a technical standpoint, I agree, with those price targets. I think they're realistic. But you'll still have a modest price cap even at those levels.
Yeah, absolutely. So we'll go to KDNC is my next one. And this is one that we covered off not so long ago. And we said that, I think we thought it was going to rise to around the 5.5 pence level, I think it was. And indeed, that was a correct call. I think we actually shot up and we hit 6.4 pence, didn't we? So we did really well there. And what I've got here, we've got that blue box reversal zone down here at 3.8 down to 3.47, which is correct call again. That was in the chart show. But I think that, we're going to see another rise in this one. I've got another blue box there, actually, at 4.1 down to 3.7, which is sort of just flickering around the bottom of there. But I think we're due another run on that one. So for me, breaking a hold above about 5.5 pence. And my next target would be this red box zone here at 8.1 up to 9.48. But there's a possibility with that, depending where it sort of lands in that box there, we could be heading up to this other red box zone here at 10.15 up to 12.55. So I think it just depends on how the sentiment is at the time and obviously what news comes out. But, I think that there's at least, 1.5 bags in that one, probably a little bit more. But it certainly looks good from my perspective. And I think there's another one we've had a few developments. So I'll let you discuss those, Alan.
Okay, Justin. Well, this is similar to EIU. It's a company with a tiny market capitalization that owns it owns 35.7% of the Amapa iron ore mine infrastructure and railway line and port in Brazil. So it's the scale of it is staggering. So the asset was owned by Anglo American in 2012. When Anglo American owned the asset, it didn't have the net present value that it has now, but it booked it then at a value of $600 million. It was bought out of administration by Cadence and a team back in 2018, and Cadence have since worked to bring the project back on stream. So the latest developments are they have an agreement with an off-taker to recommission the Azteca plant. Now, Azteca is a processing plant that once it's commissioned will generate 300 tons a year for 3 years, which will generate approximately 14 million a year in free cash flow. Now, this assay agreement in place has the company provided an update a few weeks ago, and the assay results for that were taken by the off-taker specifically to as part of the agreement came in. It returned composite grades of 54% and 56.7% Fe, that's iron, with a median grade of 55%. The off-taker is perfectly happy with those results. They met due diligence requirements and they won't be taking any more sampling. So on the back of that, the financing process is continuing in line with expectations, and we'll expect to hear more about that. But what that free cash flow from that offtake agreement will do is contribute to completion of the larger Amapa mine definitive feasibility study. And of course, that will see the Amapa mine back in operation, back in production, and shipping its product worldwide via the Santana port. Now, the product already has many buyers around the world. It's in demand. There were some tailings at the port a few years ago. Those were all sold into the marketplace. The product's known and it's highly valued. Most recently, the company raised 2.46 million at 3p. So looking at that floor you were talking about, Justin, that's entirely in keeping with that. And in that fundraising, there was an oversubscribed wrap retail offer for 300,000, and also the board also invested into that fundraising too. They invested a total between them of 180,000. So that's what I call a skin in the game. Just an aside, there have been a number of broker notes also out on Cadence and Amapa too. Now, Zeus, the broker, most recently published a broker note with a 21.8 pence price target and that's based on a mapper alone. Worth bearing in mind, of course, that Cadence has other investments too, most notably in the megalith and megalith concessions at Sonora in Mexico, although there's a dispute currently going on with the Mexican government, so that they are challenging that. But in terms of value at a mapper, 21.8 pence is a considered valuation. So yeah, I think once we get the financing agreement signed off in place and the offtake commencing, then we're going to be in a very, very exciting position for shareholders.
Yeah, and as you say, I think that that 8 to 9.48 pence is potentially conservative, but I'd have thought if we're going to hit 9.48, then it should go on to attack the big round number 10p. So fingers crossed on that one. So one that I hold. So fingers crossed indeed. But yeah, certainly it looks good for KDNC. And another one, which is it's tiny market cap considering its assets, isn't it? So and fully funded. That's great news. So it looks pretty a good risk from my perspective. So another one certainly worth doing some research. Right, next one we're going to do is MDH, and another one that we've done just recently, Mendel Helium. And this one, and there's not an awful lot of trading data from my perspective, sort of back from October 24, and really it's just been basing around that level. It had a bit of a spike up there to nearly 10 pence level, was it? Or it did hit 10p. But from my perspective, where do I think this is going to go? Well, I think probably a break and hold above this 4.1 pence level or 4p level. If you could break and hold above 4p, which seems to be a big barrier, it should go on to this first red box here at 5.814 up to 6.699. But the bigger target here is this 10.26 up to 12.7. And because it's been, it's been basing for such a long time, it could be an explosive move. So, obviously all these people here who've been buying, you probably hold on for much longer than just one bag. Depends what news is out of the company, of course. But so that upper target there could be a reality. From my perspective, first point to call, that first red box there, and then see how things go from there. So, I think there's been a few developments in Mendel Helium, so I'll let you discuss those out.
Okay, so Mendel Helium is at a very exciting juncture in its evolution. So the company came out of the old Voyager life, and the earlier price spike there referred to activity within Voyager at that time. But the company has an agreement to acquire M3 Helium. It'll issue 57 million shares to M3 shareholders at that point. That is due to take place at the end of November. I suspect as that date has been moved, we may well see a move again, but not by a great deal. And the reason for that is that the Roswell that everyone's been focused on is now in production. So the company is it's a helium play. It has agreements over the Hugoton gas field in Kansas, and it has an agreement with Scout Energy, which has a processing plant called the Jayhawk processing plant. So when these wells come into production, there's a farming agreement, and the company can literally plug and play into the assets to get the helium processed and get it out to market. It also has a Bitcoin treasury management policy. It's onboarded for custody with BitGo Incorporated to oversee that. But the key fundamentals for this company are, as I said, the acquisition of M3. There's also an imminent move to the AIM market from Aquis, and of course that's going to open it up to an awful lot of investment from AIM funds, tracker funds, and so on. But the key thing is that commercial helium production is underway at the Roswell, and it's taken a while to get there. But that well is now generating $1,600 per day of helium, and that's steadily rising. So when we hear from the company next, I expect to see that figure much higher. Just as a show of confidence in the asset, Nick Tulloch has spent a further £86,000 of his own money on buying warrants in the company at 1p. He spent well over 300,000 on buying into the company at this point. The company also raised a further 200,000 recently at 3p. And it's this, I think the key thing here is once these wells are in production, it's the unrivaled access to infrastructure. So it's already producing, so it's already generating cash from the helium sales. And once the acquisition of M3 is completed and the move to AIM is completed, I think we're going to absolutely see Mendel fly.
Yeah, I think so too. It's another one which I hold actually. So, and interestingly, I believe it's the only helium play that is in production. Is that right? I think.
Yes, yeah, that's great. A lot of them are very close to it, but I think you've got several players. I mean, Mendel, I think, is the most notable compared to. And I know when we last spoke, Justin, you had an overlay of the valuations versus peer group, and Mendel's valued at about 3.5 million. So it really is a very lowly valuation. And then you got Pulsar, HE1, HEX, all of these companies valued between 20 and 60 million. So the valuations in comparison are very low, but this company is already generating and selling helium. And I think that's the key thing. Once they start to move out and scale up across the Hugoton field, we're going to see an awful lot of action. And I think we're going to see this company achieve a valuation many, many times of where we are now. But one final interesting point, all of the industry players in the area have come to visit Ross to see what their production process is, because it's they haven't kind of just tapped into it and opened it right up. They're gradually releasing the pressure so the well is steadily producing. And I think it's a process that has attracted industry attention. And obviously with that attention come investors, come potential joint venture partners and all the rest of it. So plenty to watch out for here.
Yeah, it's going to be exciting. It's going to be interesting to see what sort of impact the move over to AIM is going to have, especially on liquidity, because Aquis listed, it's very difficult to buy. You can't. AJ Bell, I think Hargreaves Lansdown is by telephone order only. Yeah, so it's very difficult for most people to buy. I know you can do it through IG, which I've done, but it is difficult to buy Aquis stock, so that should help. But interestingly, I think the Bitcoin is like the a hidden gem that could produce a massive spike if Bitcoin can make a recovery, which I think it might do that. So there's a couple of things to go at, but obviously the primary thing is the helium, and it's the only producing helium play on the stock it was from the small caps. So yeah, it looks pretty good to me. And as I say, I think that first target there is potentially conservative because it's only a £3 million market cap. These things tend to move really fast because the free float is tiny, isn't it? Get a bit of volume there, and this thing's going to absolutely rocket. But it looks good to me. Right, next one we're going to do, and final one for today, is SBDS and Silver Bullet. Haven't covered this one off before on this series, but for me, this is a really good chart. If I zoom out there, I've got a sort of, we've had before back here, this from this low down here in June 23, we had a spike all the way up to 200 pence. So that was up from 19 pence up to 200 pence. And then we've had an absolutely monster sell-off for some reason. But it's not a story that I've followed for that long, but I've only followed it just recently. But, and then we've got this blue box reversal zone here at 23.8 pence. It does go all the way down. It's just the way I calculate things. But for me, what I like about it is the fact that from that blue box reversal zone, we've only had one wave up. We've had a corrective wave. So I'm expecting another. And I'll talk about short-term targets, which, for me, it would be this red box zone here at 57.5 up to 67.5. That would be my initial target, from where we are at the moment. So that's potentially 2 bags on offer from where it is at the moment. And longer term, and I'm not saying that this is guaranteed, but, there's a possibility based on the way that I chart it, which generally works out. But this could be heading up to 206 pence, all the way up to 254. Is a possibility, but short term, let's concentrate on the two bags, which that's fantastic anyway, at 57.5. So to me, chart looks really good. I think the news out of the company has been really good, but share price has fallen back. So Alan, I'll let you talk us through what the company's all about.
It's baffling that it's actually at this level, Justin. And I think the companies maybe suffered because, of course, we've seen a lot of companies in the AI space come to market, and perhaps there's a proliferation of companies in the space on the market. No one's quite sure what they do, and of course, interest in the sector wanes. And if there is a sell-off, which of course there has been recently, it's companies like this that tend to get punched the most. But silver bullet. So you've obviously look at the price chart. We can see the price has fallen. And now we have a market cap right now just over 4 million, which is daft. So Silver Bullet employs 85 data specialists around the world. It's got hubs here in the UK. It's actually centered in London. It's got hubs in London, Italy, Australia, USA, and of course, South America. It's got a proprietary 4D AI advertising solution. This is designed to help advertisers to target consumers in this new privacy-first data world that we live in. And it also has an existing services business which serves blue-chip clients. These include a leading UK hospitality company and also a global brewing brand. The company's growing fast, rapidly acquiring and accumulating industry experience, and it's got a good track record with its clients of delivering strategic digital transformation and activation for its clients. The board, of course, headed by CEO and James, they've all held senior positions at global software companies and have a lot of experience in the sector in data engineering, software as a service, product development, and so on. So key fundamentals, revenue growth to June 30th. So headline revenue growth, this is on the half year, grew by 10% to 4.8 million, despite challenging conditions and also tariff headwinds as well, and general instability in the UK market. So still generated 4.8 million. Total bookings of 9 million secured by 31st of August. So that's by the half year versus 9.3 million for the whole of last year. So again, we're seeing really strong growth, really strong performance, more growth as expected. Service revenues of 5.7 million already secured, 88% of the annual target. That's up nearly 12% year on year. 4D revenue, 3.1 million booked in year to date. And that's already 80% of its full year target. So this company is massively overachieving in hitting its targets and exceeding those targets. We also had a really significant appointment. A non-exec director appointed, Dara Nazrav was appointed. He was formerly head of global sales at WeTransfer. He was also formerly MD at Twitter UK and has worked at Google and YouTube as well in the past. So a real heavyweight addition to the board there that I'm sure is going to provide invaluable strategic guidance for the company. In June, we saw the company raise just over 3 million, 3.14 million. It also restructured low notes at that point, and then it went on to raise a further 450,000 in a wrap retail offer, all at 30p. And here we are currently trading at 21p. It just seems completely at odds to me, A, with the money the company's raised, so it's raised nearly all of its current market cap, and B, it's turning over 4.8 million in the first 6 months. So there's got to be a massive valuation reset at some point, and it's not far away. If there is a Santa rally, I think this company will be a major beneficiary of that.
Yeah, and for me, as I say, that's an absolutely brilliant long-term reversal zone. So I'm surprised there hasn't been more reaction to it. And as you say, just over £4 million market cap, they've raised virtually all that just recently at 30 pence. So, I think it's cheap as chips. And, as much as I keep on concentrating on the smaller target there at the 57 to 67 pence, But if it did go to 200 pence, it's a 10 bagger in financial terms for where it is today. But in terms of market cap, that would be just over 40 million. I mean, that doesn't sound too bad, does it? It sounds realistic. If this heavyweight can actually produce some cracking contracts, it really is a possibility that could be reached. So, it looks pretty good as a risk reward from my perspective.
No, I agree, and I think they've got contract wins lined up, further contract wins, so they're going to way exceed those targets. So you've got that revenue coming in, plus the revenue they've already raised, a new non-exec to help drive growth. I think there's every reason to buy this, and I agree, it is cheapest chips at this level.
Yeah, it does look good to me, and hence the reason why I hold it. But I'm underwater at the moment, but I'm still really confident about that one. So
Keep holding.
it looks. Yeah, oh, absolutely. This one's definitely going to benefit from the Santa rally. Okay, I think that's it for this one. We should be back again soon. Thanks for joining me today, Alan. See you again soon.
Thank you, Justin.